Hello, this is Brian Shannon from Alpha Trends Blogspot. Today is Friday, the 14th of September, 2007, and the market's closed. S&P 500 finished with a loss of 1 penny for the day. But as you can see on the weekly time frame, we had a nice week after last Friday's gap down on the jobs report. So let's take a look at the daily time frame. You can see that the market did close with a green candle, meaning that today's close was higher than the open, and that's why it's painted bullishly here, even though it did finish with a loss of 1 penny. The market gapped lower this morning and looked like it was maybe in for a difficult session, but with a rising 5-day moving average, buyers swept in and bought up, and the rest of the day it really just kind of ground higher a little bit. You can see that right from the open, the market did get above that daily VWAP, and that held as support for most of the day as well. So overall, the market is acting a lot better than it has over the last few weeks. We've got these higher lows, but today's low, the last couple of days low range, I think, is just people maybe unwilling to take a meaningful position until we have the Fed meeting out of the way next Tuesday. So we'll see how that affects things next week. But the charts are telling us, still kind of neutral in here. I think you could make a case that it could go either way. And when you have charts telling you that it could basically go either way, what you want to do is refer to the larger time frame. And when you look at the larger time frame, it still looks pretty negative here. So what that means, basically, we've got to be very cautious. The 150 level is going to continue to be very important going forward. If it can get above that level and stay above there, then I think a lot of short sellers will have been trapped in this market, and that could be fuel for a break to the upside and maybe new highs as well. So we'll just continue to go slow and take it day by day. The 10-minute time frame, again, it's looking more neutral now that we've got this these moving averages crossing over. But from an intermediate term standpoint, I think as long as today's lows hold, which is about 147.60, that's about where the 5-day moving average is as well. Then I think from the intermediate term standpoint that you got to give the benefit of the doubt to the buyers in here. But again, with Tuesday's Fed meeting, it's tough to really make any meaningful directional bets right now. The semiconductors, I thought that breaking back below 37.30 would be difficult for that group, and we did get the market below there, and it's also stayed below that level for the entire day after that gap down. So we've still got a declining 5-day moving average. If you look at the daily time frame, I had been encouraged that it was holding above the neckline. It broke below that neckline, stayed below it. This market really looks like it's heading down towards a test of maybe that 200-day moving average or these lows here from about 3 weeks ago near about 36.30. So the semiconductors tell us that we've got to continue to just be very careful in this market. So again, nothing's changed in there. Looking at today's action in the semis, they gapped down, tried to recover a little bit, but the sellers did maintain their control over this market for the entire day because it did close below that daily VWAP right there. And looking now at the IWM, the Russell 2000 finished with a gain of 39 cents. That's about 0.5%. Still stuck below the 10 and 20-day moving average and below the recent important level, which has been about 78, 78.10. Let's just call it. Basically, this level's been very important here over the short term. We got that gap lower in here today, and it looked like maybe things were going to get real ugly. But buyers came in very quickly. And you can see that's why I say if it breaks down and stays below there, it's not the breakdown but the subsequent action that really is important. And here the subsequent action after that breakdown was that the buyers came in and took advantage of that. It was a nice stair-step higher highs and higher lows that came in with big volume on the moves higher, followed by little low volume retracements here on the 1-minute time frame. So we did get a test of that VWAP, and a lot of times when you have a rising VWAP, that level will act as support. So it's very good for some day trade entries as far as buying strength above that with a stop below the subsequent low right here. So there was a good trade in there if you were involved, maybe even over here. I didn't take those trades, but I'm just pointing out different ways to use that daily VWAP. So on the weekly time frame, let's take a look. You can see that still a very ugly picture. It's going to have to clear that 80-20 level before we can have any thoughts of potentially getting bullish on this market for more than just a couple days of trading. Still got a very steeply declining 50-day moving average, and that also tells us reason to be cautious. So 78 and $80.20 are the important levels of support for this market. I'm sorry, resistance for this market. As far as support goes, today's lows are going to be important going forward, so we've got a nice spot to mark from there at about 76.75. Breaking below that, that's where I think that we'll get the next leg lower. But it's starting to, it's not starting, but it continues to kind of be more neutral. The best looking market here continues, though, to be the NASDAQ 100. Last Friday it gapped down and closed below that 50-day moving average for 2 days, but the 50-day moving average is advancing here. So a real mixed market with the S&P 500, the IWM, the semis, and the NASDAQ 100. We did get a green candle here as well. They finished with a gain of 4 cents. It was an ugly open. Yesterday I'd suggested that 48.70 would be a potential level of support near the 5-day moving average. Today's low was 48.73. So it came right down to that level. And if you look, I'll add these in here right now, the pivot lines. It came right down to the daily S2, right on the open. A lot of times when it comes down to S2, there's buyers waiting there. When you take the S2 along with the, what am I trying to do here, along with the 5-day moving average, then that gives you a pretty high confidence area to get long with a tight stop. So you saw that we had an initial little, the open met some buying, a little shakeout, and then the same real nice pattern of higher highs and higher lows in here on this 1-minute time frame. And it stayed above that daily VWAP for the day. As long as that VWAP for the day is advancing and the market is above it, you're generally not making good bets if you're betting short. So, pay attention to the direction of the daily VWAP. It shows who has control of the market for the day. So this level here, 48.70, is going to be important next week as far as potential support goes. And this is shaping up to be an important resistance area. Is about $49.40. So breaking above that would be very bullish, and could lead to a test at the 50 level and continued upside from there. We still got this inverted head and shoulders pattern that is valid here, and this is indicating a move up beyond 51, up to new highs. So the cues continue to be the most bullish looking, and again, we've got a fundamental catalyst next week you have to be aware of, so mark your calendars for that, and remember, risk management is the most important consideration when it comes to trading.